Small business owners, you're going to learn how to do a bank reconciliation and create your financial statement using just one adjusting journal entry. Here you can see the sample bank statement that was made to demonstrate how to do a bank reconciliation. So you can see here you have your opening balance, your closing balance, your total deposits and withdrawals. These are very important for us. The opening balance is our beginning or our start to the bank reconciliation. Our closing balance is what our final number should look like. Now, when you create your bank reconciliation, you want us to have a section for your date, the description, amount, the balance, and then any type of account that will be included in your bank rec. So depending on what kind of transactions you have, make sure if you're a small business that all your bank transactions go through this one account, okay, or most of them at least. So if you're starting off and you're just starting off as a business, create a business checkings account where all your revenue can go into and flow through into, as well as all your expenses. That way it's very easy to track and you can create your own final financial statements in a very simplified manner. So you start with your opening balance. You have that 3,245.62. So you'll go ahead and input that at 3,245.62, your balance as well. Now, one thing I want to point out is you just want to make sure you're using your functions here. So you're going to say for your balance, it's going to equal your opening balance amount. Now, the next thing I like to do is I like to start with the dates and making sure I get every date in here. Okay, so we're going to start with April 2nd. And go through all the way till April 28th. Okay, so here you input April 2nd, 2026, and you go down through till there is all of your dates. So you have April 2nd, April 4th. You don't have to, you can go one by one through each of these. I just like making sure the dates here are good, and then I can quickly take a look at, using the date. Oh, April 4th is rent expense. Oh, April 22nd is sales deposit. But it's up to personal preference. Now, what's very important is making sure that you have the correct description. You want to have whatever is going through your bank account. And the reason why is you want to make sure this is very easily audited, very easy to look at. So you're going to write sales deposit. Okay, and then you write the amount. So you can look here and you can see that our amount went up. Okay, so it's going to be a positive amount for 3,200. Okay, and now what you do is you're going to create a function where you look at the above function and you're going to plus this function. So you're going to take the above number plus this number amount, and all you're going to do is you're going to drag it down. Okay, when you drag it down, it's all your balance will look the same, and you can take a quick look and compare it to the balance here. So you can see it's 6,445.62. So things are looking good. Now, when you are doing your accounting, every account that you input here needs to be the opposite number. So it needs to be equals to the negative of this. And the reason why is this is an accounting principle. So if you have anything that's a negative number, it will be a credit. Any positive number will be a debit. So for revenue or sales, the number should be in a credit if you have revenue. If you have rent or any expenses, they should be in a debit. So this may not make sense to you if you don't have an accounting background, but you will need to do it like this for all your different accounts. So you're just going to do equals negative of this balance, negative C3. And what you should do next is make sure you have a quick check. And you don't need to input any of these. You can just leave it without anything to make it look nicer. So what you're going to do is you're going to add a quick check here. Okay, and the reason why is we want to make sure if we make a mistake that it gets caught early on. So all you're going to do is you're going to take the sum, you're going to take this amount and add it to the sum of all these numbers. Okay, so you're going to take this amount, this 3,200, plus the sum of all these accounts. And to make sure it's done correctly, it needs to be 0. Your rent expense, oh, the number went down, so it'll need to be a negative number. It'll need to be a negative number. And you can check the balance. You can see that the balance should be 4595.62. It is equal to 4595.62. So we know we're on the right step. Moving forward, you need to input it into one of these accounts. So you're going to do a negative. Now we have a positive number here, and our check will be 0, which means everything is being done correctly. You'll go through the next one and write supplies expense. It went down. We paid for supplies. It went down. Our bank account went down. It'll be a negative number. which account will this apply to? It'll apply to your supplies account. And again, looking at the check, it's 0. You go through coffee expense, okay? Again, it's negative. Our coffee, we paid for coffee. This depends if it was a personal coffee or if it was for a client meeting. If it was for a personal coffee, it would be a shareholder loan. If it was for a client meeting, it will be meals and entertainment. So in this case, we just assumed it was for meals and entertainment. We're going to go down this list and you can see how things are moving. You have the e-transfer at $500. So we took money out of our bank account and we e-transferred it to ourselves. So that's a personal thing. We took money out, we transferred it to ourselves. That will be a shareholder loan. Now you can see that this shareholder loan will be in a debit balance because it's positive. There will be a tax implication here. If you watched any of the previous video related to the shareholder loan, this is something that we need to be quite worried about if it stays on our balance sheet for over 2 years or over 1 year after the taxation year end. So it's something that we need to be wary of. If you like this video, make sure to like and subscribe. Now, we're going to move on to the next one, our golfing expense. So we know golfing is never allowed. Okay, we know it won't be deducted for tax purposes. So we're going to say that this was a shareholder loan as well. We went personally out for golfing. We have another sales deposit. So our number is not going to be negative. It's going to be positive. Our amount went up. We're just checking to make sure the balance is the same, $5,399.47. No mistakes there. It'll be negative of the $1,750. Makes sense so far. The check is at 0, so everything is correct so far. We have again supplies, looking at 96.25, negative number, it went down. Our supplies amount, let's say we made an error. Okay, so we inputted the sales deposit amount. So we accidentally misclicked. We didn't do negative 96.25. We clicked negative 1750. Look at that. We have a number here in our check, so we know this is incorrect. We need to fix it. So we go and we do a negative balance. So that's the reason why you have the check there. Okay, very important, very easy to make a mistake because this is very tedious work. Going through the coffee expense, the last coffee expense, we put it into meals and entertainment, assuming that it is a business expense here. Now we are done for this year or this month, but let's say this was our only thing for the year. Now we're going to create our adjusting journal entry. So we need to figure out what moved, how much did everything move by. And one thing that we want to make sure here is that our balance, ending balance, is the same. So 5293, closing balance here is 5293. So we did the correct thing. So we're going to take a quick look and see how much did our cash move by. So we do our ending balance minus our beginning balance. It went up by 2,047.80 cents. And then what we're going to do is we're just going to sum all of this to get 4,950 and move it to the right. Now what we want is another check balance. But in this case, it's not going to be C12. It's going to be this E12. So we're just going to fix that. And it goes to 0. So we now know that we've done the correct thing here. So this is our adjusting journal entry. How you actually do the adjusting journal entry, I'm going to go through it with you really quickly. So you're going to look at all the positive balances. If it's a positive balance, it will be in a debit amount. If it's a negative balance, it will be a credit amount. So you have debit cash, debit rent, debit supplies, debit meals and entertainment, debit shareholder loan. Okay, and our credit here is just that of the sales. So we go in and we input that now. So we have debit of the cash amount, debit for rent, debit for our supplies, debit for meals and entertainment, debit for shareholder loan. We do our sales of 4,950. We make this look a little bit nice. We sum the top. We sum this as well. And we have to just do our check here. So we're going to do this plus this balance, and it should be equal to 0. And then it's correct. So look at that. We have our adjusting journal entry here. So this is the entry you're going to have on your QuickBooks, okay? And when you do that, you're going to be able to make your financial statements. So you're going to have cash sitting on your balance sheet, and then you'll also have your income statement that's made through your income statement accounts. Okay? That's it. Once you've done that, you'll be able to generate financial statements using your QuickBooks. This is a method that many small businesses use. If you like this video, make sure to like and subscribe for more practical Canadian tax guidance and accounting videos. Remember, this is general information, not personalized tax advice.